Market Update, September 2017, presented by Jeremy Jacker.
Okay, what was significant about this chart last month, and it's how quickly things change, Sydney was actually sitting in starting to decline. This is from a houses point of view, not the total market, so there's houses and units that we look at. So Sydney actually moved across to starting to decline. They've now readjusted it and said it's back at the peak of the market. I don't know how they adjust those figures so quickly, but let's just say there seems to be a bit of a shift where I think we can all agree Sydney's got to be at close to peak. Like it's been bubbling along so well for so long that it's got to be somewhere near at least the peak, and if not, starting to decline. But we'll let the powers that be run with what they've done, and we'll just keep to track it. What's interesting is, and we've done this once before as well, but Perth was sitting here, approaching bottom, and we've moved to bottom. And I reckon that's pretty accurate, and I'll show you why I think that's pretty accurate. And we may even be sort of sitting in, just moving into start of recovery. Maybe that's just the optimist in me. Okay, so from the unit perspective, things are still pretty grim in Perth. We're still in a declining market. I'd say it's definitely slowed down. The rate at which I've seen prices falling on the unit side of things was pretty dramatic. That seems to have stabilised a little bit now. Still not great, but we've got units that we've been trying to move for a long time, and we're getting offers on these units now. Not fantastic pricing, but we are getting offers on them. So I think, and we're not continually dropping the prices every month at the moment, so that's good to see. So hopefully we're finding a bit of a bottom there. It's going to be a long time before we see any sort of recovery on the unit side of things. What's interesting though is Sydney was peak of market, now that's moved over to starting to decline. So I think it's pretty obvious that something's happening in the Sydney market. It's teetering just based on pure statistics, but I think most people's gut is telling them that it's probably had its run. The question for Sydney now is it a bubble or is that the new norm? So is that now where prices will stabilise and your medians will sit around there? And this is what's historically happened. So I meant to dig out the chart I put up at the beginning of the year where I showed the how many times your wage it takes to purchase a house in Sydney and across all the capital cities. And what happened is back in 2005, 2006, Sydney was way up here, Perth was, so it was very expensive, Perth was down here, it was very cheap. And then over that decade, we sort of came into meet. So Sydney didn't really drop in terms of its pricing, it stayed level, but what happened is we came up to meet Sydney. And now Sydney's kept going and we've stayed relatively stable. We've had a bit of a drop, but Sydney's gone on this massive run. So now the affordability to buy a house in Sydney is, I think it's 8 or 10 times your salary. I think in Perth it was 4.5 or something along those lines, and that sort of split was what it was like back in 2005, 2006 for the market. So will Sydney fall off a cliff? I don't think so. They've still got a lot of underlying demand there for the dwellings, but they've probably had their run. So I'm hoping now it's our turn to catch up. Okay, so what's happened in terms of property? So what was the magic number we always said for a balanced market? Anyone? 10. Yeah, it depends what statistics you're looking at, but if we're following these statistics, balanced for Perth is about 13. So we're inching closer and closer to that, which is a really good thing to see. And you can see the difference between last year. So I thought it might have been a bit of a seasonal thing where we'd gone into a bit of the selling season, but the trend seems to be continuing where the stock's getting absorbed and this isn't heading in the wrong direction. It's going in the right direction with us. primarily driven by houses as opposed to units, although the stock of units is getting absorbed simply because there's not as many getting built now. DAs are not getting away. Oh, sorry, not DAs, but projects aren't getting away because of funding and things like that. So most developers have got their hands in their pockets. Either they can't afford to do it or they don't want to do it because the profit's not in the projects anymore. So that stock is slowly getting absorbed, but there's still a massive oversupply. But from a housing point of view, we're starting to look a little bit better. The rentals are still not great in Perth, and probably the main driver behind that is just affordability. Most people can go out to the fringes and buy a nice new house and probably be better off cash flow wise than actually renting. So rentals have suffered as a result of that, but they are dropping. So that's good to see. I think we've got a long way to go before we get back to anything realistic in terms of yield, great yields and demand for rentals at the moment though. So once again, the sales volumes are holding pretty steady. I think this is probably just a bit of a lag effect as to what's happening with the median. I think you'll find the median's probably stabilising a little bit now in Perth, so we're just going to need to watch that trend line and see where that sort of heads. But I don't see that going down too much, and all the indications from all the commentary I'm seeing is people are predicting a bit of growth in Perth, albeit small. Units, once again, the sales volume's going okay, but the price has obviously tanked a bit. Once again, we'll just have to watch that and see how that's going to play out, whether that's going to continue to go down or whether we've sort of found our bottom there. The land, yeah, I mentioned sales volumes have dropped here, and I've got to be honest, I don't have a clue what's driving that side of things. If anyone's in the land development space that's got a bit more of a feel on that, I'd be all ears, because I really can't see why we've got a massive, well not a massive, but we're getting a decrease in the sales volumes on the land side of things. Okay, so along with all the market update stuff, we've also been running some good news stories in the interest of trying to promote a bit of optimism in the market. So this is basically the state budget that came out and some of the forecasts that they're banding around. Now, take these with a grain of salt, they're forecasts. They could be wildly off, who knows, or either in the positive or the negative. But what's really great from a housing point of view, because this is ultimately what will drive housing, is employment growth in Western Australia. So where's that employment growth going to come from? Well, I think I put a slide in here that shows a few of the projects that they're doing. Where personally I think it's going to come from is more from the resources sector. There seems to be a lot of movement in the exploration side. I've seen a statistic. Does anyone know John Lindeman? Yeah. So he's pretty big on his stats, and he threw one slide up which had, I think it was a 45% increase in exploration licences this year. So there's a lot of activity on the exploration side, which does create some jobs. People have got to get out there and get drill rigs going, and so there's obviously a flow-on effect from that. But that's not where the real drive of employment comes from. It's once they analyse all those results and they see value in a project and they get a project up and running, and you get construction teams and things like that out on site, and you're really starting off new projects. So how long to get from exploration phase to that phase, I don't know, but it's good to see that there's a lot of exploration going on. All the chatter I'm seeing out in all the forums that I get involved in is people are expecting something happen with gold. The US has got massive debt. They've overprinted their dollar. The stock market's been on a bull run for the longest bull run in, I think it's been 8 years or something like that. It's been on a bull run, which is pretty significant. Usually it's about a 6-year run. So what follows a bull run? A bust. So where do people take their funds out of a stock market when shit's hitting the fan? Usually gold. So when that will happen, or will it happen, who knows, but that's just the chatter that's out there, and everyone seems to be pretty bullish on gold. Good thing for WA, except when your government introduces a gold tax. So, I've got to be honest, I haven't sort of delved into the gold tax debate, but I have seen that headline floating around, so I'll have to find out a little bit more information about that. The economy is expected to grow by 3%. Once again, that's a good sign. I think we've been pretty stagnant. There we go, it was only up 0.25%. Okay. So at least we're heading in the right direction though. We are getting growth. And this is in a general sense, economy to grow by 1%. So the outlook for WA is at least positive in the broader sense for the next year. They're not talking it down. Okay, so this is how much they're going to collect from taxes and revenues, and as always we're going to spend a little bit more than we can afford to. But what was interesting, is it on this slide or the next one? Yeah, sorry, maybe I didn't put this one up. So what they're expecting to happen in not this year, but the next couple of years, is come back to a surplus. So they reckon they're going to pick up all their revenues and actually be in a surplus, which is a good thing. Mind you, spending the money is not bad. At least it's getting out in the economy and driving things. And so the government's got a couple of their sweetheart projects, which is obviously this one. They've gone into that many years on that one, so they better pull it off. It's got to be a good thing. Obviously, it's going to, from a property investor's perspective, where this line runs, I think it's the main run they're talking about is connecting, I think, through sort of Thornley and those areas. Yeah. Sort of I think it was through Kalamunda, not Kalamunda, Kensington. Yeah. Yeah, so it's good that they're starting to connect a few of those areas in, and there's a lot of development land out that way that personally I haven't gone near because it doesn't have the infrastructure and there's not the support there for it. Maybe this might change a few of those areas. But yeah, I'd wait till you see boots on the ground before you get too excited. Look there. A lot of road work was going on. They're investing a lot in tourism, so hopefully that brings a few dollars in. What was notable, that was really the only big project I've seen in their hit list. And love him or hate him, I think Colin Barnett, yeah, he went crazy, but I think he's done some really iconic projects for us. But I think they're things that you've got to spend the money on if you want, especially if you want tourism and things like that. You've got to build those things to get tourists over here and to engage with them. And so I think time will show that he probably done the right thing. That's just my opinion. But I think he's done some really good things building. He's got the stadium up and rolling. That was sitting in. Going back and forth. Every time there was a change of government, it was on, it was off, and at least he got it together and actually got the project rolling. And I know, things like the Defence West, I noticed that the guys down in Henderson, Austral I think it is, so they've won a few good contracts. I don't know how much work that translates to in the Perth area, but at least it's a big thing. We have a Perth company out there building warships, but at least they're working on the global stage with things like that, which is really good to see. Okay, so what does it all mean for us? So personally, I'm in a buy phase for property. For me now is probably the prime opportunity to secure your next deal. Main reason being a lot of the news headlines probably aren't out in the public. People are still a little bit unsure. People they're not watching these figures and they don't know that there's good news coming, or they probably aren't aware that the bottom's there. They see the odd little snippet in the Western Australian. But I think it's pretty clear that something's happened in Perth. There has been a change. So we're definitely not still in a depressed market. There seems to be a bit of positivity around there. So as investors, now is probably the time where you want to start thinking about those next deals, and bear in mind you might take on a deal that takes a year or 2 years to complete if you're doing developments and things like that. Even if it's single house developments, they'll run out for a year at least. So think what's coming ahead. And I think particularly if you're playing in a market where it's medium price, young couple or family homes, you're going to be pretty right. That seems to be where all the stock's getting absorbed. Obviously the thing that comes off of the back end of that is upgraders, so people taking advantage of the bottom of the market to use the equity they've got in their existing properties to push across to another suburb. So there'll be a little bit of that. As property investors, I think you're probably safer playing in the median price bracket. There's a lot less volatility and a lot more market in that area.